Okay, let's go ahead and dive right into the stock market technical analysis. This will be the first video of 2025, and what we'll do is go through the broad markets, look at some individual trade ideas that I've kind of talked about recently, and we'll wrap up. If you're interested in getting additional market insights, additional trade setups, additional charts, link in the description below for the private member group. I've priced it at $5 a month, so you can cancel anytime. Check it out if you're interested. Okay, so we're going to start off with triple Qs, seeing a rally. Again, in the private member group, I talked about a potential rally. I was kind of looking for a small rally into the end of the week. We're seeing that. We're seeing that right now, basically today. So let's kind of dive in there, and then we'll see where we go from there. On the daily chart of triple Qs, we have this big bearish rising wedge. So that is a bearish pattern that is telling us the major target of this bearish move will be right down here at about 478. So that is my target to the downside. I think that is where we are heading. But, you know, we're seeing it a little rally into the end of the week. I think that rally gets sold into as we progress down towards the measured target. Okay, so that's kind of what I thought. I figured, okay, we'd probably rally this week. They'll keep things kind of propped up going into the first week of the new year. Keep everyone, keep the bulls kind of long and bullish, thinking that, okay, we're just going to have a repeat of last year, and then we start to move lower. So that's where we're at. If I go down to the hourly, you can see there's some basic resistance, kind of short-term resistance right about in here. There's a gap to fill. There's kind of two levels. I've got really this kind of level, which is at about 519.60. And then you have all the way up here at about 525.75, I think would probably be the max. There's also, you could look at this 522.70 as another level. So multiple levels, but in general, it's not a lot of upside. We've already, started to see that rally. So to the next level of resistance, it's really about a 0.3% there. And then if we do rally, up to maybe 1% up to maybe roughly 1.5%. So that's kind of the upside. And again, I don't exactly know where it turns. I think we're going to just turn right at that 519.60 area. I think that's probably the end of the rally, but they'll likely close it there to close the week, and then next week we'll pick back up. So that would be very limited upside. And then going back to the daily chart, the downside to the measured target of the bearish rising wedge, because that's the highest probability when you see these big bearish patterns with negative divergence. It's really been building since here. Big negative divergence. Momentum has been dropping as this bearish pattern kept building last year. And then, so the measured target would be down there. And the downside, if we hit that measured target, is from where we're at right now. Let me grab my tool. Is about 7.5%, roughly right around there. Okay, so I see, maybe 1.5% upside for a 7.5% potential downside. So risk reward ratio, it's really good. It's over a 3-to-1 risk reward ratio. And so very favorable trade, even though it doesn't have to play out. You want to take trades with a high potential to make a lot more than you have to lose. So that's your risk reward ratio. So I like the probabilities there, and I like the bearish setup. I like the negative divergence, and I like the trade risk reward ratio. So in general, I'm looking to flip back short. I took a little long trade here on this thing, but I'm looking to flip back short if we get, really minimal upside. We'll see where we close the day. If they want to push this up to about 519.60 or right around there, I'll probably look to start flipping short for next week's price action, which I expect to be down. All right. We might open on Monday. They might open at right around kind of levels and grind around for maybe a day. But ultimately, I think the selling shows back up as we continue to push down towards that major target. That's my anticipation. If something else happens, then obviously that's wrong. But we'll continue to kind of watch that. And I'll just go through some of these Mag 7s. Tesla's been getting sold into. Again, you had a sell signal on the break of this trend line All right, that was your trend line break. Didn't really have negative divergence on that one, but you did break, and they, started to push down towards the support level. Buyers coming in, so I could see a rally here. It's come down pretty good. I could even see a rally up to a new high. If that happens, then you're going to put in a back test of the broken trend line, and then at that point you're very likely going to have negative divergence. So the momentum indicators would move up, something like that, and put in a lower high. You'd have the negative divergence and a back test of resistance. Very, very objective to short up there if you get it. So I don't have a trade on that one right now, but just something to look for. Tesla, if it wants to keep going lower, you had this is the downtrend. This was the bear market that Tesla was in going back to November of 2021. We had lots of reactions to validate that. There's another one to validate that trend line. There's more right there. So I would see the downside as probably a back test. And the 200's right there, a back test of that major support, which it was major resistance. It should now be major support. So move down to about 253-ish would be the downside. So I think there's plenty of downside. I mean, from where we're at right now, that's still another 35% to the downside. But that doesn't necessarily have to come right here and now. We might push up, do a back test, very objective to short right there, and then you could see over time a move down, and that would be a 50% drop from way up there. So from where it's at right now, it's kind of in no man's land. Google, not much going on with Google. It's kind of just treading water. It is diverging. It does have negative divergence, but no real sell signals, no real breaks of trend quite yet. So that one's kind of just floating. So we'll move on from there. Apple did see an initial pullback down to support. This first support level, about 241.78, holding here. So I could see a bounce. I think the bounce will be relatively muted in this one because we've got a better support level right down here at 237. All right, that's your former breakout high. All right, there's a reaction there. So I could see us coming down a little bit more. Good support right down there at about 237.50 or so. Very strong support. So I think Apple's could just, it might, you see a little bounce here, but I think we're going to continue a little lower in Apple. And Microsoft, again, sitting at support. So Apple and Microsoft both are at support. You can see here Microsoft at this downtrend line here, and we're just kind of sitting there. We're just below the 200, but again, it's just, it's close enough. It's just right there at support. And then you can see on this blue trend line, I've got support, support, support. So it's just right there at support. So I need to see a break one way or the other. And as it's holding support, so it's not a short. The only thing to really do is to go long or wait for a break of support. So that is, I could see a bounce here. I could see a breakdown. I don't, the objective trade is to go long, but with triple Qs rallying into resistance, and I think triple Qs is going to turn and head lower towards that objective target. I think Microsoft's going to break to the downside. Doesn't mean it can't maybe have a short-term bounce. All right, Meta. Meta basically, you have to defer to the larger pattern. So Meta, you've got this big uptrend line that it was in. It then started to put in a bearish rising wedge here, and then it broke that bearish rising wedge. It back tested, and it, to me, seems like it's heading lower, like it's in a near-term downtrend. You can see I've kind of marked out a potential downtrend here. It's on the hourly chart, it shows. So you can see right there is the downtrend line. And we are getting rejected. You got reactions all through here. There's another one. And today, close enough. They might run it back into that resistance. But that's the downtrend line I'm watching on Meta, and I'd expect that to hold. So I'm looking for lower prices. If it rallies into that trend line, that's resistance. It's objective to short there for the next move lower. Let me go back to the daily chart to show you where I think that next move lower would be. And I really like this level right here. You can see basically you've got, so you've got some reactions there. There's a gap right there. So I think a push down to 543.22. And depending on where the 200-day moving average is at, when you get down there, you might spike down and hit that and then probably hold. So I like that as a support zone down there. From where we're at now, that is a drop of another, it's about 9.5% down to those levels. So that's what I got on that one. And Amazon's very similar to Google. They just seem to be kind of treading water. I've got Amazon in this upward channel here. It's at or near resistance, so I'd expect us to come down to the bottom of the channel, and that's really all I have. So if Triple Q's goes down to its measured target, Amazon's probably going to go down to the bottom of the channel, and then that would be support down there. I don't see any real divergences on the daily chart for Amazon telling me that it's going to break trend. So the most I've got is a move down to the bottom of the channel. But from where we're at now, that would be a move of about 10%. So that's kind of consistent with what I see the Triple Qs doing for that measured target for right now. Okay, so those are the large cap tech stocks. I'm noticing some impulsive buying in the ag input stocks this morning. Here's Mosaic. You can see, strong buying showing up in this one. Let me go down to the 5 minute. You can see, boom, pretty strong buying there. Also NTR. Let me flip over to that one. And it's very similar. You can see strong buying showing up. CF is another one. That one, not quite as strong, but still up 3%. So I am seeing some strong buying. And so, and these things are pretty oversold. I mean, when you go to the daily, here's Mosaic. This one continues to be a bullish setup. So I like it. I like it as a long-term investor stock. I like it as a potential trade buy. It doesn't have a fully defined buy signal. You do have a big bullish falling wedge, and you've got big, strong bullish divergence. That bullish divergence has been building for a while, just the same as this bullish wedge has been building. And you've got kind of looking at kind of longer term support. Let me see if I can grab the right tool here. It could, there might be some more downside. It's hard to say because there's no buy signal. We're just in this bullish wedge, and that bullish wedge can continue. It can continue to kind of grind lower until it breaks out. So you really have to see it break above this trend line that I have right here on the daily chart. You can see resistance, there's another reaction there. So you got to see a breakout there. And then once you get that breakout, the widest part of the wedge would be your measured target, and that would set us up, depending on where we break out. Right now it's looking at about 41.50 as the measured target if we break out soon. All right. So that's what I have on that one. And again, the rest look pretty decent too. Same with NTR, looks decent. I have to go back and kind of maybe rechart this a little bit because it's gotten a little messy, but it's still, you can see the most recent low. Let me zoom in. The most recent low right here is a divergent low. All right. Its momentum is continuing to build, and it's basically a divergent low that should get bought, and you can see, boom, they bought it. They're buying it up. So again, you need to see a breakout for a trend change, but these divergent lows, they get bought until one of them breaks out, and then ultimately this thing should run. So semiconductors, again, big part of the stock analysis, because Nvidia is such a heavily weighted stock in the S&P 500 and triple Qs. So here's SOXX. You've got an uptrend line here, support. That trend has been broken, and they've been back testing. It hasn't broken down. I mean, it broke trend, especially with the gap. See the gap right there? Impulsive breakdown. Back test. 3 back tests, and they're rallying it again today. But again, I think the trend's been broken, and it's likely heading lower. So from the highs right here, I've got this blue line. If you kind of just mark it out, probably could adjust it now because they did kind of break it, but I'd go like that. And I would say, watch that trend line. The 200-day If they can recover the 200-day and they can recover this trend line, then that's nothing but bullish. All right, there's your trend line to watch. A solid daily close back above that trend line is bullish, and if you're short, I think that would be a objective place to cover your short. Otherwise, we should head lower and get rejected. Either there's lots of resistance overhead. You got the trend line, you got the 200-day, you have this downtrend line. So plenty of resistance overhead. Again, I'm looking for lower prices down to 194.60 for the next move down. Interest rates, TNX, not really backing off. I mean, we saw a little bit of a pullback on the 10-year interest rates. They're down to maybe 1.5%, but not really backing off too much. So watch this one. All right, if interest rates at the TNX goes up, stocks should go down. All right, if the TNX goes down, then you could see stocks rally a little bit on interest rate relief. So keep an eye on that. Again, if I roll out, I had a downtrend line here on TNX, 3 distinct reactions. That downtrend line's been taken out, and they bought it at the 200. So in general, I've got an upward trend. I think yields can rise, and rising yields should be bearish for the markets. If you want a long trade, it's not my favorite long, but it's at support, PNC. You can see we have a rise. It's a bearish rising wedge. We broke to the upside, looked like stop rate price action. We're back down at support here. So if you're a bull, because I have a lot of kind of perma bulls who like to tease me when the market goes up, and when the market goes down, they go silent. So you just wait for a up day, and you'll look in the comments, you'll see him, and wait for a strong down day, and you won't see him. That's kind of how it works. This one's at support. All right, so if you're a perma bull, if you're just a buy and hold investor and the market only goes up kind of person, then that's at support, and pretty oversold. You can see there on the RSI, it was definitely really oversold. So I could easily see a bounce here up to probably about here. I like this as the resistance level, right about there. You can see I've got an impulsive, that's that candle there, and I have an impulsive breakdown there. So a rally up to about 198.70, and then we'll see. Again, a break of this trend line would be your sell signal. And kind of consistent with that one is this FITB, just treading water. Now, this one had a very big, nice, well-defined bearish rising wedge here. And the widest part of the wedge gives you your measured target of that is a push down to right there. I've got it marked in blue. So I still see this moving lower down to 34.30. We just need to kind of take out this level that they're holding right here. You can see the last few days, about 42.30. Daily close up below that, and I think you're going to have a quick move down. All right, you probably will flush right down to the 200-day, and there's some support here at 38.70, and then from there you probably get a bounce, and then continue down to the measured target. So I'm looking for lower prices here. Just need to start to take out some of these support levels. We hit that support, and it's just been holding there for a couple weeks. Once that goes, we should roll down to the next level of support. About 30, I got it about 38.85 or so. And the 200-day, they'll probably try to hold the 200-day. Will look like this. We'll probably flush right through the 200, hit that support, and then recover the 200 and bounce back to resistance, and then move down. Natural gas, at least the UNG. I'd have to look at the futures, but UNG is an objective long right here and now. Basically, you can see on this one you've got nice clean downtrend line to watch, and they chopped it around here a little bit, but ultimately broke out on a big impulsive breakout. I think this was up like 25%, just basically gapping up that much. Sold off and came right down to support and the 200-day just below. So that's an objective long. That's as good as it gets in terms of an objective long for the next move higher, which probably going to push us up to this former reaction high right here. I think that would be your next target. And if that does go up there, that is a move from where we're at right now. or, you know, if you bought the trend line perfectly, but it's about 40% upside in UNG natural gas. Now this one's super volatile, so, you know, you want to have a position size that matches accordingly, because this can also just take out this trend line and break, and you don't want to get just, you know, you don't want to just get busted out on that. So okay, and I'll wrap up with GE. So GE again had a pretty strong uptrend, all right, then put in this bearish rising wedge right about there. Widest part of the wedge gives you the measured target down to about 133.53, and that's your kind of a former reaction high right there. You can see they're buying the 200 so far. It had a brief little dip, but they stepped in and bought it. Usually when you see a hit of the 200, and I talked about this thing hadn't touched the 200 for quite a while, since December of 2022. So yeah, they're going to buy the 200, and that's exactly what's going on. They dip it below, but then they buy it, hit the 200, it's holding. So there's probably some more rally left here. Here's how I'd probably trade it. Look for a trend line break. I'd probably go down to the hourly on GE and see if we can't get some sort of an uptrend line here, and then a break of that trend line would indicate that this rally is done. So that'd be kind of step one. And then also, if I go to the daily chart, you do want to see that 200 really get taken out again. You get a daily close below the 200 again, especially an impulsive close, something like a big red candle like that. That very most likely will indicate that the 200 is now broken, and, you know, this should go on to hit the measured target. So two things to look for. I do think we'll get it, but, you know, we got to kind of watch for those next sell signals on that one. All right, I'm going to get the video out and wrap it up. Drop me a thumbs up on your way out. Catch you guys on the next.